Hey everyone, welcome back to Corporate Decoder, the place where we make sense of corporate filings, even the boring ones. Today we're cracking open TUCOWS proxy statement. Will there be any unexpected drama, maybe a boardroom brawl over office snacks? Let's dive in and find out. So what's this document all about? It's an invitation to TUCOWS annual shareholder meeting. They're going to vote on who gets to sit on the board of directors and who's going to audit their financial records. Basically, it's a chance for shareholders to have a say in how the company is run. The meeting is set for May 20, 2020, 2020, 2020, 2020, 2020, 2025. If you were a shareholder on April 1, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020. If you were a shareholder on April 1, 2025, you get to participate. You'll need to register online before May 19th. Now, the company is giving everyone access to these materials online, trying to save some trees and maybe a few bucks on printing costs. If you really want a paper copy, you can ask for one. There are a few key things shareholders will vote on. First, they'll elect 8 directors to the board. These are the people who oversee the company's management. Then they'll vote to approve Deloitte L as the company's accounting firm. Having a good accounting firm is important to make sure the company keeps its financials in order. Let's take a look at who owns this company. It's important to know who has the most influence. The table shows how many shares the executives and directors own. Elliot Noss, the president and CEO, owns a good chunk of stock, about 5.9%. EdgePoint Investment Group owns a much rake owned Ipridge gives them. About Sheep Fund Management owns 8.2%. Menega, Capital and Legiz, Elshaf owns 5.4%. Black Sheep Fund Management owns 8.2%. Menega, Capital and Legiz, Alchaft owns 5.4%. Norman Rentrop owns about 12.8%. Black Sheep Fund Investment Group owns a much rarer amount, which gives them about 19.1%. Norman Rentrop owns about 12.8%. Black Sheep Fund Management owns 0.3%. Menega Capital and Legiz, Alchaft owns the fund management owns 8.2%. Menega Capital and Legiz, Alshaf amount, which gives them about 19.1%. Sometimes company insiders like directors and officers have to report their stock transactions to the SEC. TUCOWS mentioned one minor hiccup. A report about stock options for Mr. Brett Fawcett was filed a little late. It doesn't seem like a huge deal, but it's something they had to disclose. Time for the popularity contest, electing the board of directors. The current board has 8 members and they're all up for re-election. There are some new names in the mix too. Sandra Matz is an associate professor and she knows a lot about people's behavior and how they make decisions. Lawrence Malte-Ninaba is an experienced investor. Alan Taylor is an investment company founder that support deep tech startups. Let's talk about how this company is run from the top. Good corporate governance means the company has rules and procedures in place to make sure it's acting ethically and in the best interests of its shareholders. TUCOWS has a bunch of documents about this on their website, like the charters for their audit committee and compensation committee. The audit committee oversees the company's financial reporting and makes sure everything is on the up and up. The corporate governance, nominating and compensation committee, well, they handle things like who gets nominated to the board and how much the executives get paid. Ms. Chase is the chair of this committee. How much do the directors get paid for their service? Each non-employee member of the board will now get paid $50,000 annually. The chairperson of the board will receive an additional $15,000. The chair of certain committees receives an additional $15,000 annually, and each member of the audit committee and corporate governance, nomination and compensation committee will receive an additional $12,000 per year. Okay, let's get into executive pay, the good stuff. They want to attract and keep talented executives. So the company aims to provide a mix of compensation like salaries, bonuses, and stock options. A chunk of the executive's pay is tied to performance. So if the company does well, they do well, and vice versa. The company targets compensation at the 50th percentile of market levels. Every so often, shareholders get to vote on whether they approve of the executive pay packages. In 2023, about 92% of the votes were in favor of the executive compensation. The next shareholder advisory vote will be in 2026. Here's a snapshot of what the top executives could earn in bonuses. The target incentive bonus opportunity for the CEO, Elliot Noss, is $451,880, which is tied to the performance of Team Wavelo and TUCOWS domains. Justin Riley, the CEO of Wavelo, could earn $300 based on Wavelo's performance. David Warwick, who heads TUCOWS domains, has a target bonus of $1,666,848 $6,848 based on Wavelo's performance. David Warwick, who heads TUCOWS domains, remains has a target bonus of $66,848. Another important part of executive compensation is stock options. These give executives the right to buy company stock at a set price. In 2024, Elliott Noss was granted $141,089 in options. This table shows all the stock options that executives have. The exercise price is the price you need to pay to get a share, and expiration is when these options go poof. What happens if an executive gets fired or if the company is sold? This section outlines what they'd be entitled to. For example, Elliott Noss could receive around $1.8 million if terminated without cause, and even higher, almost $4 million, in case of a change in control, meaning some other entity owns the company. This includes severance pay and other benefits. The committee that decides how much the executives get paid is made up of independent directors. This is meant to prevent conflicts of interest. This section compares executive pay to the company's performance and how well the stock is doing. In 2024, the CEO's pay was $975,733, and total shareholder return was $28. It also provides a comparison against a peer industry index. The audit committee checks the financials to make sure everything is accurate. They went over the numbers with both the management and the company's external auditors, Deloitte. KPMG used to be the accounting firm. The firm was changed as approved by the audit committee. Now, shareholders are asked to approve Deloitte as the independent accounting firm. Here's how much the company paid its auditors, Deloitte. Audit fees were the bulk of it, with $1.8 million. If you have an idea for the next shareholder meeting, mark your calendars. Proposals need to be in by December 11, 2000. So, what's the big picture here? TUCOWS appears to be on solid footing with a clear focus on aligning executive pay with company performance. The shift in auditors seems to have gone smoothly. The company is trying to be transparent with its shareholders, providing detailed information about everything from director compensation to potential payouts in case of a change in control. However, there are some areas to keep an eye on. While the company highlights the importance of performance-based compensation, the actual connection between pay and performance could be stronger, as the incentive is based on combined numbers of different companies, which can mask bad performance by some of the companies, which can mask bad performance by some of the companies, even if other companies are doing well. Overall, TUCOWS seems like a well-managed company with a commitment to good governance. However, it's always important to dig beneath the surface and understand the potential risks and opportunities. That's all for this Corporate Decoder episode. If you found this breakdown helpful, be sure to like, comment, and subscribe for more insights into the world of corporate filings.